Hey yo. Yeah, what a crazy ride for D-Wave, but I'm always annoyed because you want to hold all the shares you can, but you can't totally um, always get there. Well, if you're down 50% on D-Wave, that means that you want it to be up 50 or 100% shorting it, right? So I think you have to accept that you made a big bet. Sometimes when you make a big bet, you got to take some pain before it pays off. And the question is, do you have enough wherewithal to take the pain, both financially and emotionally? And that's deeply a function of you. You know, I can go deposit more money in my account. You may not be able to do that. I've got lots of other accounts you may not have. I have a startup that's worth a lot. You may not. So if you want to go all in on a short, just be prepared for the pain too. A market is a wild beast. There's no taming it. It'll go to the price it wants to when it's ready, not on your command. So if you're short in a stock and you see it going straight line up, well, just because you shorted it doesn't mean it's going to say, "Oh, hold on, James shorted it. Everyone, time out." James from Wichita, Kansas, decided to short some in his account. Let's hold the presses, everybody. Let's go ahead and um, so well, of course, if you have cash on the side, that's part of your net worth. So your position size is a function of that, really more than anything else. Yeah, you can always add funds to avoid liquidation and stay in your position. Now, oftentimes when you're getting liquidated partially, it's kind of like a stop loss, right? So yeah, we can unban somebody on Godel. I have no problem doing that. Just send me an email. But you gotta be 180 degrees different personality. 180 degrees. Complete liquidation is that shouldn't be your stop loss because that's just getting wiped out. But most of these things, um, most of these systems will sort of nibble at your position. Vertex is just one of the biggest drug companies. A lot of people are curious about it. It was a high flying hotshot company for the longest time, and now things have slowed down a little bit. Um, Vertex is the king of cystic fibrosis. It's about 10 billion in revenue a year, almost all profit from cystic fibrosis. So if you look at this enterprise value chat, right, it's a $400 stock. Okay, warrants are not debt; warrants are equity. Um, yeah, D Wave is going to go to three. It's just not going to go to three when you say it's when you want it to. That wouldn't be trading. That would be a magic genie, you know. And so you got to be willing to take the pain and the gain. And we can't curse irrationality and bless rationality. Just I guess we can't curse irrationality when it works against us because it is how we enter trade. So I guess a good example is, some people call it hurdle rate, but if some stock has a fair value of X, and knowing that there's an error bound around this fair value. So let's say the fair value of the company is say 2 billion. This is an arbitrary example. At the very least, it's worth 2 billion. You do your calculations, you work really hard, and you determine that it's worth somewhere between 2 and 3 billion. You wouldn't pay more than 3 billion, and you it's probably not worth less than 2 billion. So that's kind of, after your homework, you figured this out. Now, a lot of people say, well, that means that, let's say I have a hurdle rate of 50%, you could argue. And you say that means that I'll short it at 4.5 billion, which is 50% higher than the most it could possibly be worth. And similarly, I'll buy it at 1 billion, which is 50% less than this number. Now, you might want to divide by a different number because, 50% increase from 1 billion is not 2 billion. That's 1.5. So you might want to calculate what results in would be like 1.3 billion for a 50% return. And of course, all this is time dependent. So, okay, so let's say you say, this is when I like to get in. If the error bound is somewhere around here, which is 1 to 1.3 billion, I would be buying. All right, and here's the green for your sort of your buy zone, if you will. And then you would short at 4.5 because that's way above the fair value of 2 to 3 billion. All right. Now the problem with this is that markets aren't going to respect your inner thoughts. Markets don't give a shit about your inner thoughts, right? The market only cares about supply and demand right now in your face. So a value investor has trouble because at any time the stock can get into, I don't know what color to pick, but it's this kind of nosebleed territory of 8 billion. And if somebody said, I'm going to give you a chance to short this stock you just spent a month studying that you think is worth 2 to 3 billion, 2.5 fair value, let's say, and I'm going to give you a chance to short it at 8 billion, what would you say? It just sounds great. But if I said, I'm going to give you a chance to short at 8 billion, but it's going to stop first at 4.5 billion, you might say, well, let me think. Well, I wish I could wait. I'll just short it at 8. But you don't get that information in the stock market. You don't know when it's going to stop. And oftentimes you'll get a parabolic up before you get the parabolic down. Similarly, if I said, well, you get to buy the stock at 0.5 billion, you say, wow, that's 5 times lower than what I think it's worth. Of course I'd buy. And I said, well, you get to buy it at 0.5, but you have to watch it go to 0.1. You have to endure an 80% drop, and then it'll go up, but I can't tell you by how much. I can tell you nothing's changed to your thesis. It's still worth the same thing what it's worth, but this is going to be the way the price action develops. Conceivably, it really is irrelevant, right? None of this stuff matters. All that matters is this. The thing you can control is your research. The thing you can control is your actions. The thing you can't control is this stuff, price action. You can try to take advantage of it, but to take advantage of it, you have to have solvency. You can't go too crazy on any one stock. And if you do, you have to live by the sword and die by the sword. You can't complain because you would have been rich if you got it right. And since you made such a big bet, it's going to punish you extra hard. You wanted extra gains, you're going to have extra pains. It's symmetrical. There's no asymmetry. There's no way to have it both ways. You want the extra upside, you got to take the extra risk. There's no free lunch. And then 2, you have to be emotionally stable. And when you're losing lots of money, you start to lose it emotionally. It's very, very hard. Now, if you've done this hundreds of times, you feel a little bit better and you start to get an intuition about, okay, I think this stock could double on me theoretically, but I don't think it's going to go up 3x, or 4x, but it could go to 20, let's say D-Wave in this case. And you say, all right, well, here's the stock was at 8, and now it's at 11. let me say I think it can go to 24 before it can drop. Well, this is really tricky because, you need to leave enough powder in this case. Like I said, case A, you make money right away, instantaneous. I don't know what the right mathematical expression for that is. Let's just say zero time. Case B is it takes, 3 months, and there's 3 subcases. No pain, a little pain, and a lot of pain. And the same thing here in case C, where it takes something like 12 months. And in case D, you're just wrong, completely wrong. It's not a short, it's a long. You fucked it up. And I'm talking about the fundamental values, the real, you got the analysis wrong, not the price action. Nobody gets the price action right all the time. In fact, I would argue it's kind of like somewhat evenly distributed, but it is a function of your research, right? The price action will eventually be a function of your research, but you don't know if you're going to suffer or not, and you don't know how long it'll take. The only thing you're really going to figure out is if you're right or you're wrong. And so anyway, let's say this $8 stock goes to 11, and then it goes to 24. And you have to plan to survive this. So this is sort of scenario 3, a lot of pain. Now, I'm not saying that you think this is going to happen, because if you think this is going to happen, maybe you go long, or you at least wait. But you don't know if you're going to have no pain. In some of these stocks like Capper, right? We shorted Capper and went right down. It was just like blowing wind, and the whole house collapsed, right? And we've had some where there's been a little pain, like PayPal, maybe, I don't know, a couple others, Cassava. And this is one where, depending on how you look at it, again, it's all subjective. This is a lot of pain because, some of you have already made a fortune. I shorted D-Wave at 11 and covered it at 8, and I shorted it sort of at 9. I think my average is 9, I don't know. But regardless, so let's say you had a 5% position here. And let's say you made a 10% position here. Well, basically, you would have to withstand it going to 20%. Well, this is all livable, right? You would be down here. You'd be down what, roughly 12% of your portfolio. That's not terrible. In ways to frame it, Citadel was down 50 and came back. RA Capital was down 80 and came back. Now, some of these were unlikely comebacks, but most hedge funds sort of think of down 20 as, game over. Draw a skull and crossbones here. So, this would be livable. So 5% position. A lot of people use 5% as a hard limit for any position. So if you're going above 5%, you're asking for it. You could be dead right, but you're still asking for it, and you're saying, I do know the timing. Hey, Humphrey. I do know the timing of this. That's pretty tricky because I don't know that anybody can predict whether we're going to have no pain, a little pain, or a lot of pain. I certainly thought it would be no pain because the quarter just came out. Usually people figure out the quarter as the day goes on. People, for some reason, got even more bullish on the stock as the day went on. Maybe that was short covering, whatever. But the point is, you can't ever put yourself in a position where instead of, say, 5 to 10 to 20, you did... And you could put yourself in this position. It's just up to you to decide whether it's rational or not. You did 15%. And then from 9 to 11, I don't know, you grew to say 20%. And then up here, it's a 50% position, half your whole portfolio, and you're down, say, 30%. Well, again, can you come back from being down 30%? Sure. You might have some issues where at half your portfolio, the broker might say, all right, I'm going to cover some of your short, and you're going to lock in some losses for you. You might start freaking out emotionally where you say, I can't handle this anymore. I've lost a third of my money. I thought this was a good investment. Oh my God. And then you maybe make an even worse decision. And again, as your capital values goes down, you start to get in a position where your net asset value is dropping. So this position may actually be even more than 50%. So in any event, it's not easy. And one of the things to keep in mind is that as your positions mark to market against you, your P&L is dropping even though your position size is growing as a short. So there's a little bit of a frustration there when you have on a long, your NAV is dropping, but your position size is dropping too. Whereas on a short, your position size is growing. So just a couple thoughts there. Again, nobody gets it exactly right. But if you find yourself chronically like oversizing your positions, then you know what to do. William's right. The Q1 report headline had 500% increase in revenue, which sounded great until you knew that this was widely expected. And I think the people that bought it are now starting to maybe say, okay, wait a second. Maybe this wasn't as great as I thought it was. Or I now realize this was announced months ago and I should not have been so excited about buying it randomly days later. So, let's go, Humphrey. Now you got a short D-wave with us. I'm telling you, Humphrey, trust your boy. Trust your boy. Get that short account. Yeah, D-wave. QBTS. Ha! Let's go. And if you want to call, I can give you a phone number and we can discuss it if you want. I have a hedge fund friend who was going to call in the show and we were going to discuss it. No, Jinzo, I don't think you can double down each time. Okay, yeah, I'll give you my phone number up in there. Up in here.